Meet Mr. Luca Pacioli. He was a great genius and great mathematician. He was born in 1445 in Italy. And this is the person who introduced double entry system of accountancy. So before I start teaching about accountancy, first of all, let me introduce accounting equation. Because with the help of this accounting equation, I will try to explain you the basic terms of the accountancy and basic concepts. So there are two words in accounting equation, accounting and equation. Accounting means noting of business dealings. Business dealings means transactions. Now you might be thinking, what is transaction? Transaction means any dealing, any incident that has money value and related to our business. That is called transaction. Now the question is, what is business? Business means any commercial activity or any activity done with the purpose of making profit. That is called business. Suppose after schooling or after graduation or after university, you start selling computer. Means you buy the computer at lower rates and sell them at higher price. That will be your business. Or maybe you start some factory where the wheat is bought and then in the factory bread or biscuits are made. That will be your business, because all these activities are done for the purpose of making money or making profit. So let's go back to accounting equation. So you know the meaning of accounting now. Now the second word is equation. Equation word has come from equal. Equal means when two things, subjects or situations are same, they are said to be equal. So accounting equation means the equation which is related to accounting. In accounting, equation is capital plus liability is equal to assets. Now these are the new words for you: capital, liability and assets. You might have heard these words, but technically the meaning of all these words I am going to explain you. Number one, the capital. What is the meaning of capital? Capital means when you start some business and the contribution of assets from your own resources. That will be called capital. Let me explain the concept of capital with the help of this simple example. Suppose you start a bookshop. Means you want to buy the books and then sell them at higher price, and this way you want to make money. And by giving private tuitions, you have accumulated 50,000 rupees in your bank account. This is your own money. And when you start your business, 40,000 is given by your dad to you as a gift, because you are going to start your own business. In this way, total money you have got 90,000 rupees. That will be your capital, because this 90,000 is not refundable to any person in future. That will be your capital. Be careful. There is one word, that is investment. So don't get confused with investment and capital. In accountancy, the capital word is different and the investment word is different. Both have different meanings, different expressions. Actually, the meaning of investment is capital plus loan. Loan means the money you have to pay in future. That is loan. So if you combine capital and loan, that will be called your investment. Okay, let me explain the concept of capital and investment with this example. Suppose after graduation you want to start a bookshop in your area. 50,000 you have already accumulated. These are your own savings, because during the college time you used to give private tuitions, and that fees is accumulated to 50,000 now, and this money is lying in your bank. And 40,000 was given by your father as a gift. I mean to say, this money is never ever to be returned to your father again. So in this way, you have got 90,000 rupees. And you go to the bank and borrow rupees 1 lakh for 5 years. It means you have taken loan from the bank, and this money will be paid back to the bank after 5 years. In this way, now you are ready to start your business with rupees 1 lakh 90,000. Means with this 1 lakh 90,000, you can buy the books, furniture or something, whatever you want, and you can start your own bookshop. This 1 lakh 90,000 rupees is your investment. But your capital is only rupees 90,000, because 90,000 you don't have to return this money to any person in future. This money has come from your own resources. So in this way, 90,000 is the capital and 1 lakh 90,000 is the investment.